So lucky here to have Leith Van Onselen, Chief Economist at the MB Fund, MB Super from macrobusiness.com.au to join us this time every Saturday. And I'm delighted to tell you that Mr. Van Onselen is on the line. Hope you're well, Leith.
I'm good, thanks, Luke. How about yourself?
Just fine, mate, just fine. Gee, we've got some stuff to talk about. Some big data released this week with the retail and CPI figures. I think the Treasurer was suggesting nothing much to see here. The figures jump around. Should we take comfort from his words, or is it a bigger issue?
I think it's going to get worse for the Treasurer this week as well, Luke, and I'll elaborate that in just a second. But look, what this week's data showed is pretty much that the Reserve Bank of Australia is caught between a rock and a hard place on interest rates. So first of all, this week, we received data on retail sales for April, which collapsed to their lowest level in more than 3 decades in annual growth terms outside the brief pandemic lockdown. So annual retail sales grew by only 1.3% in the year April, and that's way below CPI inflation of 3.6% and population growth of nearly 2.5%. And what that basically means is that per capita, so per person in Australia, once you adjust out inflation, retail sales are collapsing. And this has basically continued the long run of economic data we've had over, for several months. The rise in unemployment rate, the deteriorating labour market in general. We've had falling real wage growth last week, I think we talked about. All the business activity indicators are really weak, which is basically, a forecast of the economy. And then this week, and gets back to my earlier point, we're going to get the Q1, so the March quarter national accounts for Australia. So that's basically where they give you the GDP growth and all that sort of stuff. And these are shaping up to be an absolute shocker. So economists are tipping that the economy will barely have grown in Q1, despite this turbocharged population growth that we're having. And they're basically tipping that annual GDP growth in Australia is going to fall to its lowest level since the early 90s recession, outside the brief lockdown during the pandemic, despite the fact that Australia's population is growing at its fastest rate in growth rate terms in more than 70 years, since about 1952. So effectively, what this means is that Australia's per capita economy is collapsing, basically, and we've got a really deep per capita recession deepening. Now, that would normally prompt the Reserve Bank of Australia to slash interest rates. The problem is, this week we also received the monthly April CPI indicator, which was released on Wednesday, and that printed at 3.6% annual growth, which is actually a bit worse than what economists were expecting, and also the Reserve Bank. So they were tipping 3.4%. It came in at 3.6%. And core inflation, that's basically where they strip out the most volatile items. That rose marginally to 4.1% from 4% in March. So what that tells you is we've got this absolutely poor economy, which is going backwards, fairly quickly in per capita terms. So, the economic pie is still growing very slightly because of this absurd population growth we've got. But everyone's slice of the pie is shrinking at an alarming rate. And the annual economy's growth, despite the fact we've got this 70-year high population growth in growth terms, in annual growth terms, is at its poorest rate since the early 90s recession. So that would tell you that would normally scream rate cuts. The problem is we've got this slightly higher inflation than we're expecting, which basically so we've had some economists saying this week that, the RBA is going to hike rates. I think Warren Hogan was saying that again. But I guarantee you this week after this really poor Q1 national accounts comes out, they'll be calling for rate cuts. So all it basically tells you is the RBA's got a pull factor from the higher than expected inflation, a push factor so basically it's getting pushed and pulled at the same time. It's trying to weigh up the slightly higher inflation, which should mean rate hikes, with the collapsing economy, which should mean rate cuts. And all this basically means is that the Reserve Bank's going to keep rates and hold for the foreseeable future, in my view.
Wow. I've got a family member in retail, big item retail, and he tells me just an indicative measure of where things are, that where there might have been 30 inquiries a day, there's now 2.
Yep.
30 inquiries a day to 2.
I'm not surprised.
Are people waiting for the tax cut, then they'll spend, or are people just everything now has just come together and it's too much, and they've said we have no option. It's food or rent or mortgage, and anything else is out of the question. Where do you reckon we are?
Yeah, I think you've summed up pretty well, actually. So we've got basically, I said this before, we've got three Australias at the moment. So we've got the renters are getting smashed by rising rents. The mortgage holders are getting smashed by, obviously, rising mortgage interest rates. So that's basically 2/3 of Australians, roughly.
Yeah.
We do have 1/3 of Australians who tend to be older who own their homes outright, and they're actually spending at a pretty solid pace. So data, which came out last week from CBA, showed that anyone over 60 is, so they broke it down by age cohort. So the over 60s on average are spending, they grew their spending by more than the inflation rate last year, whereas everyone under 60 cut grew their expenditure by less than the inflation rate. So they cut in real terms. And the youngest Australians, so those sort of under 30, actually cut their spending outright. So it's not even including, factoring in inflation. So, I think you're pretty much right there. And basically people are just focusing on necessities. So because of this, anything that's discretionary type expenditure, which you don't have to have, but it's a nice to have, people are cutting back on. And in fact, retail insolvencies have rocketed as well. So the number of insolvencies, retail firms that have gone insolvent has jumped up as well, according to ASIC data, which is obviously not a great sign for the economy. So, and then of course, retail is also competing with online now. So ever since the pandemic, people got used to buying things on Amazon and eBay, those sorts of things. So that's also smashing bricks and mortar retail. So it's a really bad industry to be in right now.
Tell me about the housing industry, because construction numbers, again, we've got a problem with the government expectation of more than a million homes or new dwellings in 5 years, and the reality of the world in which we live.
Yeah, well, I mean, talking about bad industries to be in, housing construction is an absolute shocker. So we know the Albanese government said they want to build 1.2 million homes in 5 years, starting 1 July. They're not even close to that. So, we've talked about this pretty much every week. Like dwelling approvals data released for April by the ABS this week revealed that only 12,400 homes were approved for construction in March. Now, that was the lowest monthly figure since April 2012.
What?
And
more than a decade.
Yeah, more than a decade, and on an annualised basis. So I'm using the trend data. So this gets rid of the month-to-month volatility. Yeah. It's the one you should look at. But on an annualised basis, it means that only about just over 150,000 homes would be approved construction based on that run rate, and that's about 90,000 less than the Albanese government's target to build 240,000 homes a year. And we also got some other data which feeds into the National Account. So this isn't on the number of approvals. This is basically the volume of residential construction work done. So it's done in dollar terms, adjusted for inflation, and that sank to its lowest level since the height of the pandemic in Q1. So, and then just to put a cherry on top, a sour cherry, a rotten cherry on top of that, the Australian Securities Investments Commission. I referred to the retail insolvencies a second ago, but the industry that's doing the worst is actually construction. So. ASIC data release showed that just under 2,500 home builders, well, construction firms, I should say, were thrown into external administration in the first 10 months of this financial year. And that's a 150% increase from the same time in 2022. So home builders are collapsing. We've got less approvals going up, and basically the whole housing market is stuffed. But at the same time, just to make it even worse, Department of Home Affairs data released on Friday showed that temporary visa numbers continue to remain near record highs of 2.4 million if you exclude visitors. And what that tells you is that what that suggests is that migration still remains very high, although we don't have official numbers on that yet. And all it means is that Australia's rental prices are going to keep getting worse because we're still running this very high population growth through immigration at the same time as the housing supply is collapsing basically. And, obviously it's, you don't have to be a rocket scientist to know if you keep importing people who need housing and you can't, and the number of homes you build for those people is falling, you're going to have a problem. And that's why I've got a rental crisis, Luke, to put it simply.
Yeah. Thank you, mate. Have a great weekend. Talk to you next week.
Yeah, thanks, Luke. Speak to you next time.
Good on you. Leith Van Onselen, macrobusiness.com.au.